Two profoundly incredible things happened in the markets today. One good, one horrendous. The first one is the fact that Bitcoin hit a new all-time high. Congratulations to all the Bitcoin holders, supporters. It looks like this thing really has some legs. And second one, the horrendous one, is the fact that the market out of nowhere in the afternoon got completely rugged and vomited. And in this video, I'm going to be explaining why that happened, but more importantly, I'm going to be showing you that someone knew. Folks, in this video, I will be showing you clear-cut evidence that insider trading was evidently happening. But before we get to all that, of course, if you enjoy these type of market breakdowns and data insights, don't forget to like and subscribe. And with that being said, let's get to the show. By the time the world's largest casino went dingity ding 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 and officially closed on the day, here was the headline. Dow slides more than 800 points as spiking treasury yields and deficit fear spurs a sell-off. So yes, the market was looking good today, but by the end of the day, we took a 1.6% hit. And for those of you who are technical traders, looks like we might be putting a top in. And as that headline referred to, this sell-off was highly correlated with a giant spike in bond yield, specifically the 20-year yield, because we had a 20-year bond auction today. And as you can see, it did not go so well. Overall, the market really in pain. The SPY down 1.7%, the Q's down 1.4. Like I said at the start of the video, Bitcoin looking great, currently trading at 108, but it did hit a new all-time high just below 110,000. And as you can see over here, the only green stock I can really find is Netflix. Other than that, it was a bloodbath. Here's the heat map of the S&P 500. It is a homicide. There's no other way to describe this besides Google, which had some news today, but that's not really the point of this video. Everything else, bloody red. You might as well call the SVU because this is a homicide. So to do my job, to better explain what happened today, let's drill into the 10-minute chart. The S&P 500 started off the day with a bit of a gap down at the previous trading session's low. We went up, we retested it, and then bulls said, you know what? We're in control. We popped, and then we just got frozen. We were right below the high from yesterday, sideways, 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 and then everything changed at 1 p.m. Eastern. That's right when we started to fall. And do you know what happened there? We got the results of the 20-year bond auction. And as you can see, I'm kind of giving away the lead here. It did not go well. So let me give you those actual numbers. The US 20-year bond auction, high yield actual 5.047%. Please remember that, and also remember that this was above the previous one at 4.8. Lock that 5.05 into your mind. Also, the US 20-year bond bid to cover actual 2.46 compared to the previous 2.63. Bid to cover ratio, for those of you who don't know what that is, that's how much money is going into the auction, and that's going to be divided by how many bonds are actually auctioning away. So the fact that we're dropping means that there's less appetite for these bonds. And really, to tie this all together, the US 20-year bond auction right here, the high yield came in at 5.047 versus the 5.35. Remember, yields and bond prices move inversely. So if the yield is higher, that means the bond prices were lower. To put that another way, that means that what they thought they would be able to sell these bonds for, the appetite for the US government 20-year bonds, was less than anticipated. That's a no good situation, hence why the yield was higher and also why the bid to cover was lower. And this is a giant tail, a 1.2 BIP tail. Folks, that is no good. In fact, that's really bad. Shout out to Zero Hedge for putting this together, but that 1.2 delta is the worst that we've seen since December. And the fact that we've had a yield above 5%, this is only the second time in history that we've seen a 20-year yield above 5%. Not good. Yields ripping means bond prices are plummeting, as in the appetite for this. The faith in the US government is dwindling. So I get it. You've probably heard it from everyone that we don't trust the government. We don't have faith in what they're doing with money. And it's kind of reminiscent of the story that we heard last Friday and then also at market open on Monday. Moody's downgrades the U.S. credit rating, citing growth in government debt. Moody's had been a holdout in the U.S., keeping U.S. sovereign debt at its highest level rating possible, and brings the 116-year-old agency into line with its rivals once again because of government debt. But that's just the start of the story. In fact, no matter how you look at the story, it's pretty not bueno, mi amigo. Deficit spending is ripping. Inflation expectations are picking up, and it's been made very, very clear from the Fed that they are not going to be cutting rates. In fact, right now in real time as I'm filming this video, the first chance of a 25 bips rate cut isn't coming until September, and even then, the can might get kicked down the road. And to add a cherry on top of this absolutely horrific Sunday, the only thing that's been keeping things a little bit calm, as in kind of putting a ceiling on yield, is we've been announcing trade deals. We've been told from the administration that everything is going fine, it's hunky-dory, it's trending in the way that we need it, and that kept things calm. In fact, since the recent low, the market's been popping, yields have had that ceiling, bonds have been somewhat steady, but now, even with good news of, hey, we have this reprieve with China, we already have a deal with the UK, we're talking to Japan, we're talking to Vietnam, we're talking to the EU, even now, even all that positive rhetoric can no longer keep that ceiling on yields, which remember is the floor on bonds, and right now in real time, bonds are falling. So to summarize, it's pretty much what I said a little bit earlier in this video. The market no longer has faith in the government paying back. When you buy these bonds from the government, they pay you that back and the yield in X amount of time. And the fact that there's less appetite to buy those bonds means that there's less faith in the current trajectory of our fiscal situation being good, as in people don't have really the best vibes of getting their money back. So this is showing that the market is by no means confident with the current direction of how everything is playing out. And to make matters worse, right now, all the tools that were being used to calm things down, they are no longer working. And now this brings us to the most exciting point of the video, where I believe I have found clear-cut, irrefutable evidence that some form of funky insider trading is going on. Very quickly, a shout out to Spot Gamma for providing us with this data, but as you can see, this is the price action of the overall market, and we have the gamma levels behind it, and you can see we were looking good up until about 1, and then the bottom fell out, and we found a little bit of gamma support here. This is how things look at real time as I'm filming this at 4:30, but let me rewind this to market open. On the left side here, you're going to see long calls and puts on the left side. You're going to see short calls and short puts on the right side. Does anything jump out to you folks? Does anyone see this giant long put node at 58.75? You can track when this trade was placed. It was placed sometime between market close yesterday and market open today, as in it was a recent bet. So the timing of it, a little suspicious right before a giant sell-off. But what's even crazier than that is that this was a long put position, 11,000 contracts at a strike price of 5,875. That altogether is a 99 percentile trade, as in 99% of the time, we do not see trades like this. As in only 1 in 100 times would you expect something like this. Right away, that's a little crazy. Just a midweek, right before these announcements that people aren't even really expected to be paying attention to. Last time that we had bond auctions that went crazy were November and December. So, okay, that's strange in itself. But let me fast forward this. Let me really show you what's going on. Because remember, the market popped until about 12:31, all the way up here when this player was evidently wrong. We opened up around 5,900. They were 30 points more wrong, and they didn't even blink. They sat there with balls of steel, a huge position, a massive statistical outlier through all of this. And then guess what? All of a sudden at 1, didn't take their money. You can see right when it's going to drop. They let it drop all the way to the bottom here, 130, didn't touch it. And then finally after that is where you can start to see that people are like, okay, cool, let's lock it in. They locked it in at 2 and then a little bit at 230. And then finally at the end of the day around 330, they were fully out of the position. So basically took profits here, and then took profits continually at 58.50, 25 points in the money. Folks, this is astounding. You cannot convince me otherwise that someone didn't know something. This is statistically a rare bet, and then when you put that with the timing of how things play out, I will never ever be convinced otherwise that this person, who most likely profited millions and millions of dollars, didn't have some sort of form of insider information related to the treasury bond and the big banks. And I don't know who had loose lips here, but I believe this is clear-cut statistical evidence that someone was in the know and they made a bunch of money, and guess what's gonna happen? Absolutely nothing. So if you're like me and you got busted up today because the market got rugged out of nowhere, well, my heart goes out to you. On the flip side, if you're exclusively in crypto, massive congratulations, because it did hit a new all-time high, and fingers crossed that that thing keeps ripping and ripping and ripping. Moving forward, I would recommend patience. I know right now there's a sell-off and people panic and you want to chase it to the downside, or there's other people trying to buy the dip, but I would say, hey, take a breather and wait for new data to come in. This could easily be the bottom, or it could easily be the start of a sell-off because we have a downside gap fill about 100, 150 points below. Either could happen, and I don't think there's really a point in rushing it. I don't think we should be, hey, doomsday and everything's done, but I don't think we should be overly positive and saying, no, you have to buy this dip. Let's just be reasonable and wait for more information to come in so we can identify those reasonable risk to reward opportunities. And obviously, if you want to see that in real time, remember Monday to Friday, 9 to 11, I am live degenerately trading my own account. So I implore you to stop by and check out what's going on. That's what I have for you right now. Of course, if you have any questions, let me know in a comment below. Other than that, thank you. I'll catch you in the next one.